And welcome back to the Credit Authority. Once again, I am your host, Rhonda Kulch, and I am so glad that you decided to spend time with me today. We always want to start our shows off by thanking our sponsors. So thank you to Equity First. If you are experiencing credit and or financial challenges, feel free to reach out to their trained consultants. They could be reached at area code 631-714-4822. And without further ado, we have an amazing guest. In studio with me today, we have Miss Sharon Starke with Cardinal Financial. How are you?
I am fantastic. Thank you so much for having me. Super excited.
You know, sometimes it's all about timing, right? We, you and I have been around in the industry for a long time, and your expertise right now, I feel more than ever, is really needed in the market. And I know you predominantly work with first-time home buyers. Mm-hmm. So I'm going to pick your brain. I have a 26-year-old who is looking to finally pull the trigger. But yet, as his mother, 6 months ago, I'm preparing him with where the market was then.
Yep.
And it's very different than where we are today.
It is.
So what advice are you giving to clients that may have spoken to you 6 months ago compared to where the market's at now?
Yeah, it's such a very challenging time right now, especially if you started looking for a home a year ago over the last 12 months. What we've seen in a sharp increase in interest rates over such a short duration of time. And then not only that, the landscape of the climate right now with very low inventory of homes for sale, resulting in multiple bidding wars, all over ask offers going in, and then buyers being pushed back into a corner to make certain concessions that don't suit their needs and could be risky, such as waiving a home inspection, making up an appraisal gap from the agreed purchase price to what the home could be appraised for. And it's really tough. If you're in the market right now and you're not a first-time home buyer, but you're selling your home to move to another home, there are a lot of transactions right now where the seller of the home you want to purchase doesn't want that sale to be contingent on your sale. So it really does take, for right now, those buyers on the market, they really have to be pre-positioned way early on. I mean, before the minute your son got the idea in his head about purchasing his first home, right then and there, the first thing that he needs to do is obviously get qualified, but more than that, he has to run his mortgage credit report. Credit Karma is a great tool. You have access to your own credit score, but you really need to go to a lender and have your mortgage credit report pulled. Right then and there, you're going to know what your mortgage score is. And that is the only characteristic of your mortgage application that is either going to save you money or cost you money. So right now, for your son, the first thing that he should do is pull his credit report. Now, there are a lot of consumers out there and would-be home buyers that are going to say, well, I don't want a lot of people pulling my credit report. It's going to hurt my FICO score. Whatever slight effect a hard inquiry could have on your credit score, you're going to benefit so much more by making some changes over the course of the next couple of weeks on your credit that's going to boost your FICO score. Right now, that is the only thing that's going to cost you money or save you money is your mortgage credit score. So right now, for first-time home buyers that are going out there and that are facing, if they were pre-approved 6 months ago, their monthly mortgage payment has gone up a couple $100, unfortunately, with the rise in interest rates. So we have to pre-position our clients from day one about how we could push that monthly payment down lower. And, most clients will say, well, what if I put down a little bit more money? At the end of the day, liquidity is very important, especially for a first-time home buyer. Sure. They need to have some funds after closing for any of those unexpected expenses that could come up after closing. And unfortunately, we've seen that where over the first 12 months of home ownership, credit card debt goes higher and it ends up really hurting them. So first-time home buyers right now, if you've been in the market and your pre-approval has not been updated in the last 2 weeks, you have to reach out to your lender and ask them to update you on where the current interest rate market is right now, because it is much higher than it was a month ago.
Absolutely. And what we're seeing on our side is that first-time home buyer where the interest rates are now higher, and where our staff on the Equity First side, what we're seeing are clients coming to us looking to help restructure where they could resolve some debt or reduce their rate so that their overall debt to income ratio is not so high, right? So you have to create that balance. Sometimes it's not about the mortgage payment being $2,500. It's that you might also be carrying a car payment, a student loan, and $15,000 worth of credit card debt. So what we're seeing on our side are clients that are actually credit qualified, but they've now are no longer income qualified.
Correct.
And of course, as you know, what's happening is with the lack of inventory, even though the rates have gone up, the purchase prices have not come down. So there's been no actual balance.
Correct. And you bring up a very good point, because when we talk to first-time home buyers or even repeat buyers coming in, because, if you're selling a home that you purchased 3, 4, 5 years ago, your interest rate most likely is lower than the interest rate that you're getting right now.
Correct.
So when you bring up the point where they credit qualify and their credit score is okay, I mean, it qualifies, it's good enough. We're looking at credit reports now, and instead of a buyer coming in saying, well, maybe I should get a $20,000 gift and make a larger down payment, or maybe I should tap into my 401k and borrow against that and make a larger down payment, we're looking at their liabilities to say, well, you've got a Visa with a $28,000 balance that you're paying $240 a month on. Right now, that might be the account that we want to put a little attention on.
Correct.
Because that $240 a month on your Visa card is tens of thousands of dollars when you try to turn that into a mortgage payment. So it ends up, when you look at your credit report, that's why, as a buyer coming in, your credit report is so critical. It's not just about your FICO score. It's about your entire credit profile and how we could restructure your debt to get you in a home that's going to be suitable for your family, one that you qualify for, and one that in a year after you own your home, you're not having these regrets or financial struggles because you didn't make these changes before you took on that liability of a big fat mortgage.
Yeah, nobody wants to see somebody be house poor.
Exactly.
One other question, just because I am looking at the time. How are you handling clients that are coming to you? And this, again, goes back to my son. Ma, I'm a first-time home buyer. I want to take advantage of those opportunities. Yeah. And as his mother, I'm saying to him, honey, those opportunities don't apply to you because you're going to be outbid. How hard is it, or what are you seeing in the market with people wanting to do traditional FHA? There's no more seller concession. When was the last time we heard the word seller concession?
Well, here's the good news there, is that with this shift in the market that we're seeing right now, is that there's an opportunity we have today that we didn't have over the last few months, which is the opportunity to have a conversation with the listing agent and the seller, because it was such a volatile environment and you had to be very aggressive. And I'm saying very proactive, very aggressive to make these concessions. I am seeing from conversations that I've had with real estate agents now is that it's coming back to, I don't want to say a softer or an easier market, but I want to say that right now sellers and listing agents are having conversations. The best thing that I could do for your son is that when he comes to qualify for a mortgage is to lay out all of his options, good, better, and best.
I love that. Now, if somebody's listening and they want to get in contact with you, how do they find you?
The best way to reach me is by my cell phone, which is 516-769-4622. Available every day. Any method of communication works. So I'm happy to meet people face-to-face or via Zoom. But they can always reach me on my cell phone.
And I love the fact that you're making yourself available. And what I always want to express to people, this is not an online service. When we're talking to professionals that come on our show, these are professionals that are working right here in their backyard, supporting our communities and growing our communities. So with that said, stay tuned. And Sharon, thank you so much for joining us today.
Thank you. Thank you so much.